What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. A lot to get into today in today's market update. Obviously, we'll be going over Bitcoin's price. Bitcoin up 28% in the last week alone. We'll be going over the value of the US dollar index and what effect the China-US trade war has had on the US dollar, as well as on commodities such as gold and even on Bitcoin. I'll touch on the Litecoin halving or halvening, an event that just concluded, and we'll be doing some technical analysis on a few coins, including Litecoin and Ripple. But before I get into it, I just ask that you hit that thumbs up if you got anything out of this video, and leave a comment below as to where you think Bitcoin's price is headed in the short term or long term, and what do you think is in the cards for the markets. All right, let us jump right into it. Looking at Bitcoin, this is on the daily chart. You see that Bitcoin is up 28% over the last week. We've had 7 green candles in a row, 1, 2, 3, 4, 5, 6, 7, and we're currently comfortably over the 50-day moving average. We broke the Adam and Eve pattern, which is this pattern right here, where you have a sharp drop followed by what looks like a rounding bottom. We broke this to the upside, which we're seeing Bitcoin actually respecting bullish and bearish patterns in the short term. Obviously, you see the bull flag. We broke out of it positively, and then we formed a bear flag in the short term, broke out of it, formed an Adam and Eve right after that, and we broke to the upside. So you see Bitcoin actually respecting patterns, bullish and bearish in the short term. Now, we're up against this heavy resistance line. You see this dotted line here. This is the first line of resistance, and this is just based on historical price. You don't need fancy indicators to come up with relevant support and resistance lines a lot of the time. So we have this resistance at 11.8 here. The next resistance is up here just based on historical price, again at around 12,600, and then we obviously have the swing high of around 13,900 up here, which is this wick here. Now, if we zoom out and take a look at the weekly, you'll see on the weekly that we are up against this resistance that we've identified a long time ago, going back 1, 2, 3, 4, 5, 6, 7, almost 8 weeks now. There is this resistance here that was established really all the way back in November 2017, but that spans across going from the beginning of 2018. Obviously, we had the market crash, and then now we're retesting these levels again, and we haven't been able to close above this resistance going all the way back to the beginning of 2018. So a year and a half, even more than a year and a half at this point. And this resistance here lies at around 11,900. So we've gotten over it, obviously, but we haven't been able to close above it. And today is today's candle marks the beginning of the new week. And so we'll see if we can actually get above this and close above it as the week concludes. Again, I'm bullish on Bitcoin in the long term, and I do think we will eventually break this. However, I did say that it is pretty weird. It would be weird if Bitcoin doesn't retest the 21 EMA at some point. Now, obviously, the market establishes first of many, right? The first time to do X. And so this could be the first time that Bitcoin goes this long without retesting the 21 EMA. I mean, the last time we went from 10K to 20K within 14 days, and that was a first, right? That was an anomaly. So we don't have to retest the 21 EMA this week or next week, but it would be weird if we don't test it soon. Maybe I shouldn't use the word weird. I'll be a little more articulate. It would be out of the ordinary if we don't retest the 21 EMA soon. As always, we are not fortune tellers, so buying the dips remains the most efficient way to suck the most out of the market. And obviously, I did buy the dips. We did buy the dips at 9,500. I had a buy set at 9,100 that didn't hit. Some traders in our community had their buys a little bit over 9,100 and were able to snag the swing low on Bitcoin. Lucky for them. If you want access to the trade alerts, that link is in the description. The Diamond Traders and above gives you access to the stock trade alerts, as well as obviously the premium trading discussion group, and you're entered into the 0.03 Bitcoin drawing that I do on the first of every month, which is getting pretty expensive, by the way. Now, on the daily, every indicator looks like Bitcoin is actually going to eventually break this resistance. The only thing that worries me is the volume, right? So when we have significant moves up and the volume does not increase significantly, that is the first telltale sign in any market that we're dealing with a bull trap. Now, I'm not calling this a bull trap yet because, like I said, this is the beginning of the week, so we have to give Bitcoin a chance to prove that this rally is a truthful one with increasing volume, and we are seeing healthy green volume bars, but they're just not as tall as we'd like them to be, such as in these previous rallies here, or even going back to just the second or third week of July with these green candles here, right? We're still kind of shy of that. But the MACD obviously trending upwards, the RSI trending upwards, far from being overbought, and the OBV, which is a great indicator of the volume flow, in which direction the volume is flowing, is also gradually increasing. So in my estimation, I do think that in the short term, we will break this resistance here, and we might see some heavy resistance at around 12.5, 12.6, and I'll definitely be looking to buy the major dips and retracements. And in conclusion, going back to the weekly, like I said before, if we do end up testing the 21 EMA, it could be that the 21 EMA continues to rise as Bitcoin breaks imminent resistance. And when we finally go back to retest the 21 EMA, it won't be at that low of a price point, because just a couple days ago it was at 8,300, then 84, and now we're currently at around 8,800 on the 21 weekly EMA. So if the 21 weekly EMA eventually goes close to 10K and we end up retesting it there, then it won't be so bad, or it won't be interpreted by the market as that drastic. Now, with Bitcoin, what else is increasing? Gold. And I did have a trade alert on gold. If you go back to the trade alerts going back to July 16th, you'll see that gold here was in a bull flag, and the price was at around 133. And I said that there was a swing trade to the next resistance target of 137.50. Well, gold has broken a 52-week high, and we're currently at 138. Now, why is this happening? Apart from the technicals, obviously, right? You have to trust in patterns and technicals and institute sound trading strategies along with that, such as breakout trading. But it is partly due to the dollar, the US dollar weakening. And the US dollar is obviously weakening because of the US-China trade war, the ongoing trade war. I'll get to that in a second. But the US dollar is down about 1.5 points going back the last 3 trading days. And what we see historically is that when the US dollar weakens, in the short term, gold and even Bitcoin tend to rise in value. I looked at a historical chart of Bitcoin. This purple line here is the US dollar index. It's basically this chart here, but mapped out compared to Bitcoin's price. And we see that there is a slight correlation between the price of Bitcoin and the US dollar when big moves tend to happen. So when we're in consolidation phases where the US dollar index is in a range, you see Bitcoin is also in a range. And it's not every time that the US dollar goes up, Bitcoin goes down, or vice versa. Because when the US dollar hit a peak of 103, the US dollar index, Bitcoin crossed $1,000 back in December 2016. Now, you do see, though, that the big moves, right, whether the US dollar takes a huge dive and crashes, you do see Bitcoin making large counter moves as well. Same thing here at the end of 2017 when Bitcoin hit an all-time high of 20K. It coincided with a swing low for the US dollar index. But like I said, it is not a perfect correlation, but there definitely does seem to be a loose parallel between Bitcoin's price and the US dollar index. Now, why is the US dollar index tanking? Well, it's because of the ongoing trade war between China and the US, right? You see here, China devalues their own currency, the yuan, and stops US farm imports. So in retaliation for Trump tagging China or threatening to tag China with new tariffs on $300 billion worth of goods, China actually devalued their own currency. And yes, that might sound weird to you, but China has the power to manipulate its own currency. And that is why the US is constantly accusing China of currency manipulation. It's because they do set their own exchange rates, right? The People's Bank of China sets its own exchange rate. So devalued the Chinese yuan deliberately so that Chinese exports are cheaper to the rest of the world and that they remain competitive regardless of any tariffs that are imposed on them. It's almost like a competitive disadvantage to world superpowers, right? The fact that China can actually do this. And in conjunction, it stops US farm imports. So it stopped buying US farm imports in the short term. This is a massive power play and one that has ramifications to the global economy. And that's why why you see the stock market tanking as well as the US dollar index. So China is definitely proving that it's not to be effed with here. It's not like we're messing with a country that cannot compete with us in these trade wars. All right, looking at Litecoin real quick, you'll see that Litecoin did have a little bit of a spike here, going all the way up to $107 before settling at around $100. And I did see this article here on Yahoo Finance that was basically criticizing the Litecoin's halving for not having the intended effect. And I don't know where this author got the impression that the Litecoin halving was supposed to cause an immediate spike in Litecoin's price. We did look at Litecoin's chart historically and Litecoin's price in relation to the last halving. And you'll see here that during the last halving in 2015, Litecoin actually suffered a massive decline in price, and the value started moving up again within a range of $2.8 and $6 for the entire time until 2017, when crypto saw an explosion. So I don't know why this author thought that Litecoin would actually see a boom during a one-day candle. I actually thought that we might see an imminent drop, a short-term drop, because everybody was talking about it and anticipating that it would be a negative event. The author goes on to ask, but is the 6% price surge that attended the halving a boom or a bust? Today's Litecoin spike is a 7% rise at press time from last year's price, which would be great for Wall Street, but is meh for a halving. However, Joe Weisenthal from Bloomberg summed it up pretty nicely. He said the halving is completely irrelevant as a price driver. You can't simultaneously believe that markets are smart, efficient, and also believe that events literally everyone can see coming at the same time actually matter. And that's true. If you're a believer in technical analysis and the information is already out there, right? You expect that any information that's out there is already priced in. And the intended effects of the halving, or basically where miners get half of the block rewards for mining a Litecoin, the intended effect is meant to happen over time, gradually, right? You wouldn't see a reaction on a one-day candle because the supply drops over time. It takes a long time to mine these coins. So the supply dwindles in the market over time, which would theoretically increase the intrinsic price of Litecoin. Anyway, I'm glad that the Litecoin halving is over, because these anticipated events, when they're out of the way, the market can then react accordingly to things other than this looming event, right? So in my view, I'm still bullish on Litecoin for 2019. I do think that we do have at least a retest of 140 ahead of us. My price target for end of 2019 was actually 175, which looked very modest if, we were talking about June's prices, but it's looking more realistic now that we're struggling to get above 100. The fact that Litecoin is above the 21 EMA, this white line, something that it hasn't really been able to achieve in over a month, is a good sign, and it is achieving lower or higher lows at the moment, right? And almost an ascending triangle formation that you see here. So I am bullish on Litecoin. I do think that a retest to 140 is in the cards, but just like Bitcoin, I would like to see this volume increasing. You see the OBV very flat here. I will be sending out another alert for Litecoin, as I did back in early July or second week of July, when we swing traded Litecoin after it bounced off of the 200 MA. So if you want access to the trade alerts and you want to get those alerts, link is in the description. All right, finally, we'll take a look at XRP. Looking at XRP, you see here that XRP is acting very wicky at the moment, and that's why when I set my support and resistance on XRP, I do them really in these rectangular zones, because setting it at one price point or one line doesn't really make sense because of all the wicks, and you do have to be careful with setting stop limits on something like this. But there is a historical buy zone for XRP going all the way back to 2018, and it is really between the ranges of around 28 cents and 30 cents. And we did hit that a few days ago. However, I don't think, if we're slightly out of this buy zone, I don't think that it is unwarranted if you do buy XRP at this level, because we haven't been above the 21 EMA, which is this white line again, in over a month. And we, just like Litecoin, are forming higher lows in an ascending triangle formation. And you do see the RSI and the MACD increasing with a lot of room to grow. We are very far from being overbought at these levels. The OBV is starting to increase a little bit, but I mean, the volume is not there on a lot of these coins. So, however, I would much rather see low volume in periods of consolidation, which is what you need before a boom, than seeing a boom without volume, right? Going back to Bitcoin's chart here. I'm not saying that we don't have volume with these green candles, but we definitely do need to see these volume bars increase to above average levels in order for these rallies to sustain. Otherwise, we will get rejected at these resistance levels, especially in crypto where there are no fundamentals. It is purely volume driven, right? The price goes up if people are buying, the price goes down if people aren't. And so it is, to me, I think the crypto market is even easier to spot a bull trap than, say, the traditional markets because it is purely volume driven. So we do need to see this increase a little bit. And I do think that on LTC and XRP, you can justify buys here because of the low volume in this consolidation phase, right? That's typically what you see before a major spike. Anyway, that is it for this video. Go ahead and leave a thumbs up if you got anything out of this video. Leave a comment down below. Let me know where you think Bitcoin is headed and where you think the markets are headed. Sign up to our premium trading group if you want access to the trade alerts. It'll cost you less than a cup of coffee a week. I promise you it's worth it. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.